So this is your disclosure. Take a look. My name is Scott Redler, Chief Strategic Officer of T3Lab.com. You're going to listen to everyone debate on TV whether or not this active sequence is over, whether that was the move, whether this bear market bounce turns back to a corrective phase to go back to the lows, or can we absorb this really super hot data point and wait for the CPI. So we're going to discuss some levels and some things to look at, so this way maybe you can navigate this day and salvage what you had left over, or maybe you're flat coming in. It all depends on your time frame. Here's a chart of the SPYs. We had a heck of a move, right? Nice, really active sequence. It started, really right around here. You had your low at 362, and then here was your pretty much commitment to it, where you had, two little red dog reversals in the SPYs that have taken us all the way to 417-ish, okay, which is right around the 200-day. By the way, you guys know that the oscillator was like plus 57 coming in today, so we were overbought. And obviously, not one friggin' expert knows what the hell they're talking about, considering if you had any of the networks on prior to the print, they were saying, oh, 200,000, oh, 225, oh, 250, blah, blah, blah. Everyone's a bunch of friggin' blabbermouths. Anyway, they're not going to save you money. They're not going to make you money. The only person who can do that is yourself. And how do you do that? By pretty much knowing your levels, okay? And at this particular point, the narrative of this move, there's always a narrative. What's the narrative? Okay, the narrative of this move was perhaps peak inflation and peak Fed hawkishness and better than feared numbers. So when you have something come out that changes the narrative, you have to see how the market responds to it. Okay, you try and bring your opinions down, you try and put your levels up, you try and figure out, areas so you could see what's happening here. Because as of right now, if you look, the SPYs are trading right around 409.78. Okay, 409.78. We're not even at the lows of the week. Okay, the lows of the week was like 408. So if you take a look at the SPYs, if you want to simplify it, this is 407. You can't get too bearish if you don't break 407. Okay, and here we are after a huge move. So if you think you're going to buy a dip, because we've been buying dips and making money this week, whether it was in ARK or in Apple or in Amazon or in Google or even in Tesla, these things have come a long way. So you don't want to get run over. Okay, so do levels hold, do levels get reclaimed, how do the leaders act, etc., etc. So right here, we're well below 412. Okay, so this is a spot that I would think might try and hold. If it doesn't, okay, then all of a sudden, this active sequence that you had from the lows, or this accelerated sequence, probably is over. Okay, and then what could happen next? I don't know. I guess you could see it move down towards the 398 area. Either which way, you need to be careful. So I give you guys some clues on how I'm navigating my life, right? I'm 49 years old. I've been doing this for a long time. 22 plus years. I traded through the NASDAQ bubble bursting, through the financial crisis, through the pandemic. So everyone always wants to know, what am I doing long term? So 3 different time frames for me. One, my long-term account is the 401k. Every single month I put monthly flows in. 49, it'll be fine. Intermediate, my wife's blood on the street account that everyone was like, Red Dog, when are you putting that to work? You've done that 2-3 times in the last decade. We talked about that. Okay, I put in 2 tiers, okay, because it made sense, right? 2 tiers that started, one around 385-ish and then one around 364-ish, that I did say last Friday at this time, okay, I sold over half of it. Just in case, we go back and revisit what Mike Wilson says from Morgan Stanley, or some of these guys say, and who knows, maybe we do have to come in and do some kind of W. But again, to do that, it's got to get below 407. Anyway, a lot of traders have enjoyed, this type of move. I know I have. I've been sitting in 10 to 14 positions for a week or two, massaging positions, making money from the market versus just day trading, because we've had to just day trade because the market's been so weak over the course of the past year that it didn't pay you to sit in them. Most things have been below the 8 and 21 days. So anyway, this was a likely spot, right, to come into resistance, to kind of get rejected at, right? This was a pretty big retracement right into resistance. Yes, could we have gotten to 425? Could that have overthrown happen? And who knows, maybe it still does. Maybe all the shorts come in, like, we got this now, and then boom, the things hold in there today. As of right now, again, things aren't getting absolutely crushed, even the 10-year, okay? So at this point, go back to the daily chart, and here's your 407. Right now, we're at 410, okay? So there you go. It's not even not falling apart, so every bear will come out and say we're going to get absolutely crushed. Who knows? So at this point, here are your Qs. Okay, remember the Qs that we've been trading very, very well. Tech's been leading the way. Okay, so Tech, at this point has upper support at 320, 318. Look where the 8-day is, guys. The 8-day is all the way down here. So we can still see the 8-day and still have a decent active sequence. Right now we're at 320, which is right there. That's just yesterday's low. So don't, listen to the TVs. Don't look at everyone's opinions. Don't, figure out, oh, now the Fed's going to go 75 or, this and that. By the way, the Fed officials said that the market was getting ahead of itself, that a 3.2 10-year is not going to be the way it is. It might be closer to 4. So this kind of, I guess, signifies that. So anyway, moving along, we all know what the leaders are to watch. Tesla's a leader. Tesla right now is trading at 910. Okay, so if you think about the type of move that Tesla's had, basically it hasn't, from the 760 buy area to 940 yesterday, all we are right now is below yesterday's low of 915. If it can't reclaim 915, okay, perhaps there's a move down towards the 8-day, which again, it's been riding this entire time. So yes, we were elevated going into this. So again, that's why you have to be careful just trying to buy a dip. So that's 878. Apple, yesterday I sold my Apple. Everyone's so upset with me. Like, Red Dog, why'd you sell your Apple? I'm like, because, look at the size of the move and put a doji in. What's a doji? Doji means that some, what's it called? Momentum is slowing, and it's an indecisive candle, and that's what that was right here after a huge move. So anyway, Apple right now is below. Okay, it's at 163, below 164.43. Does it stay below that? If it stays below that, chances are, they could shake the tree down to the 8-day, which is closer to 161. Then you have Amazon. Look how strong Amazon's been. But again, extended. If you were buying Amazon, versus the post earnings pivot, hopefully you trimmed some yesterday. I sold my Amazon yesterday also. Everyone's like, Red Dog, why are you selling and swinging Amazon? Like, because A, you have the jobs report tomorrow. B, the oscillator is plus 50 damn 7. Overbought is at plus 40. And, there's still some problems out there. So anyway, I would look at Amazon. Amazon low from yesterday is 139.55. So if you could even change this, let's change this to 139.55. Maybe it holds there. So we got to see what happens today. Okay, do they shake the tree? Do they end the active sequence? Do they hold some things in and we wait for the CPI? A bunch of months ago, I was on Fox Business with Liz, and she's like, do you think we're in a recession? I'm like, listen, I traded through the 2007, 2008 financial crisis. That was a financial crisis. You had housing crisis, you had foreclosures everywhere, you had 8 million people looking for work. Here you have 8 million jobs open. There's an $80,000 chef job where my Red Dog sandwich is. They can't get servers, and then you have high-level jobs they can't get, and then low-level jobs, like friggin', you gave out way too much free money out there over the last year and a half. Nobody wants to go to work. So granted, we stole from these two GDPs a year ago because there's way too much money in the system because they had to combat COVID. Anyway, so now we're just going through this, squeeze out the excess time. It's very weird. It's kind of unprecedented. But what could be precedent is your process. I still think money every month into an S&P fund, if you could afford it and you're employed, that'll make you money long term. And if you have a son that's 13 like mine, 529, you had the blood on the street in May and June. That was your time to put money to work, and then in the last few weeks, you've had some decent tactical action. So there's been lots of different ways to do it. So now today will be one of those days where, okay, what's going to happen next? And the market's going to have to show you, and you have to figure out, how you can handle it based on your risk tolerance. Oil, to me, we have had a peak. Oil's not rallying right here. I basically told you guys on this day that I think oil had its high end for the year. So oil down here is good. Okay, so that's a feather in the hat of the active bulls. And you know what? 500,000 people instead of getting free money going back to work is probably good for the economy. Yes, in these better than feared reports, you heard of 8% workforce reductions or 9% or 5%. So this could be a little lagging. So maybe this will be the peak job additions, which probably will be. So again, a lot of push-pull. So when there's push-pull, you just want to figure out what you can handle. And for me, both my P&Ls are down, my active and my swing. I have a bunch of things left over, and I'm going to see if I could salvage some trades and then see if I want to get back more into tactical, or is today an impressive day where lots of things hold, where some things can go right to green, or are they just heavy? And we'll know more probably around 11, 11:30. So you'll have to figure out what you want to do and how you want to do it. But the only way you're going to do that is if you know what you're looking for and you know your levels and you know your risk tolerance. Anyway, good luck today, guys. It's 9:10. I'm going to be actively on with the Alpha team, talking about what we're seeing, trying to figure out what's next. reducing some risk. Maybe this is an opportunity. Maybe a 5-15 minute low in like a Tesla or an Apple or an Amazon. You could buy Versed and it shows you some relative strength. And if it doesn't, you know what? Get a little paper cut, get out of the way, and then we'll map out levels next week and thereafter. And just remember, it's also August 5th. It's August 5th. You should be at the beach or in the mountains. You don't have to be banging the keyboard trying to make cash flow. But again, that's that. And as I'm about to leave you, you have the SPYs right around 409.67. So remember, a spot that you can look at right now is probably about just 406.70, and we'll see what's next as we've come a long way. Okay, since the the July lows and the June lows. So just make sure you're not in such a rush here to get run over. Okay, look for signals, look for clues, know your risk once again, and try to keep the TV off. Okay, because no one knows anything and everyone's trying to figure it out. So we'll see how it goes. Later, guys.